This might be a good point for us to pivot into me sort of picking your brain on how you pick your stocks, because I have a beginning of a research framework basically that I use when I'm looking into companies, and I call it the 10 P's. And so it's basically 10 words that I would look into. Each of those starts with a P. But maybe I can walk you through those and you can tell me what you research, what you look for, and maybe some of the hidden traps or whatever that might be within each of those pieces. Does that, do you want to do that? Does that work?
Absolutely. Yeah, let's do it.
Okay. Okay. Well, the first P that I look into is the primary metric. So the first thing that I would open up is to sort of, check the market cap, enterprise value, therefore cash, debt, options, warrants, the cost, the SG&A, how much is the management getting paid based on the industry average and stuff like that. What do you look for there?
I mean, you basically listed them for sure. I
Mm,
mean, I pay, yes, I want to see that management compensation is not out of line. I want to see that the company has a reasonable share structure. I mean, I don't have strict rules around how many shares they can have out or not. Different companies have been around for different periods of time, but I want to see a track record of um, reasonable success in decisions around capital raises. So under because that says to me that management is aware constantly of the capital markets need, right? That a junior miner is a eats money, and so there's a capital markets need there. So you have to constantly be aware that that is a very important factor in running your company. So I want to look at a track record of when they raised, how much they raised, how did the share price perform at the free trade date, like, so were they able to attract sticky shareholders, or did they, to be blunt, go to a brokerage house and get the brokerage house to bring a whole bunch of clients in who sold at 4 months in a day? I want to look at that track record of capital raises because I think that's a good suggestion of the management's ability to navigate the very treacherous waters of the capital markets with some success. And that is a really important factor in whether a company can succeed. Obviously, the project matters too. We're going to get to that, but that's sort of one thing I look at in particular out of the list that you mentioned.
So is there something like a red flag, something that stops your interest in a company immediately, like too many options or too high of a overhang or something along those lines?
I not so okay. If I will look at something that would certainly stop my interest in this exact moment is if there's a free trade date coming up and the stock is up notably against the financing price
Mm.
and there were warrants issued in that financing. Well, odds are pretty good that investors in that financing are going to recoup at least some of their capital 4 months in a day, and the price will probably come down pretty close to the financing price. So I'm not going to buy just ahead of a free trade date. So free trade dates are a very significant one for me. Doesn't necessarily mean that it's going to stop me from buying the stock, but it might impact my timing of when I buy the stock, because if the price is about to be pulled down by a bunch of free trading stock, then that matters. And when I say a bunch of free trading stock, again, that references the track record of capital raises. If a company has only 50 million shares out, and they issued 27 million of them in a recent financing, that is huge, right? That means that there's a lot of brand new shareholders in this story. And so unless there's very significant expected news that would, drill results or something that everybody's really interested in, that's likely to hold people in, then that's a pretty risky point to enter if the stock is up, because floods of new shareholders are unreliable at best.
Is the same true for a pre-discovery company that makes a discovery though? Because if a company makes a discovery, it definitely attracts new money, new people.
Yeah, so I mean, the share price action in response to a discovery is again another really interesting conversation. I actually was talking about that in my last two newsletters as well, because I was talking about Snowline Gold, which you may or may not have talked about on the show. Obviously, it's been a dramatic outperformer of late. We we bought that stock. I bought that stock in the newsletter only 2 weeks ago, and then I sold half of my position last week after the news came out. Do I still think that Snowline has a good opportunity to delineate 5 to 10 million ounces of gold, at least outline? Not whether or not they drill it out to resource definition is another question, but outline a very significant gold resource. Yeah, I do. But that doesn't mean that the share price is going to just consistently march upward, because that's just not how investors react. Discoveries are so exciting. And so share prices often will overshoot on a discovery, and that's okay. We've seen that pattern. Discoveries are exciting. And so that discovery whoosh can happen. And if you want to lock in some gains, it will likely ease off again. And Snowline has, not dramatically, but it's eased off some. So when a stock hands me 50% in a week, I'm going to take half of my capital off the table, lower my cost base, and hold on to the rest if I still believe that, they're likely to carry on, especially because I don't think that subsequent holes had as much vein density. And so the grades will likely come down. And so the reality will start to impinge on that excitement a bit. So yes, discoveries have really interesting impacts on share prices, in some ways reliable and in some ways unreliable. So it takes some educated knowledge to assess whether one should what the right action is in the midst of one of those discovery share price moves.
It's interesting you should mention Snowline specifically, because one of the next P's that I look into, it's not the immediate next thing, but it is one of those, is the promotion. And Snowline has quickly become somewhat of a controversial story, specifically on Twitter, because of potential over promotion happening. There was some big words from some of its big shareholders. A lot of people on Twitter were very excited about it. So that's one thing that I would also look into is promotion. Who's talking about this company? Is the company paying somebody to talk about it? How are they paying too much? Is there a lot of over promotion? Is there a lot of over promising happening? Is that something you also look into when you look into companies?
For sure. So I think the way that information is disseminated about a project or a company in our sector has changed really dramatically in the last 15 years. 15 years ago, investors got their information from their broker. That's how it worked. Like, you're interested in a stock, you talk to your broker. Your broker talked to his analysts or her analysts at their bank or whatever, geologists that they knew, and then you gathered information sort of from that avenue. Now, the vast majority of traders don't have brokers. They use online accounts, which is absolutely great, but it's just completely fractured the way that information moves around our space. And that's fine. That's what it is today. It means that you have to, as an investor, be very aware of who's saying what and why they might be saying it. Right. And so we talked about this a bit at the beginning of this conversation. You were asking me about, talking my book versus, acknowledging the pros and cons of a story. And I do think that you have to look at why someone is saying what they're saying. And it isn't always clear. So with Snowline, there is a major investor group, Crescat Capital. They this is not the first stock where they like to put potential discovery scale or scope of potential, I can't remember what they call it, onto stocks that they really like. So how many ounces of gold do they think Snowline might have at the Valley target, or this other company might have at that target? And it's a ballpark, right? They're sort of like putting some, X, Y, and Z parameters on a volume of rock and then estimating a grade and saying, okay, that might hold. In the case of Snowline, they said 50 million ounces of gold. It's a very big number. Do I agree with it? No, but did that move the share price dramatically? Well, it certainly caused a lot of conversation. It pulled attention to the stock. At the same time, I can't differentiate between interest being pulled to the stock for that reason and interest being pulled to the stock because, oh my gosh, they're pulling 400 meters of 1 to 2 to 3, maybe even grams per ton gold at an at surface brand new discovery. That's also worth paying attention to, right? So I think Snowline's a bit of a complicated one because it's a very legitimate discovery. So it's hard to know the role that promotion is playing with that story. If we step away from Snowline and just look at promotion more generally, it's seen as a bad word, but nobody's going to buy a stock that they haven't heard of. So obviously a company has to market. They have to get out there. They have to tell their story. I think what's most important is that I want to see a company where one of the CEO's first jobs is talking to investors. And I understand that a CEO of a junior mining company has a lot of things to manage. It's there, it's like being the CEO of a small company. You can't just do one thing. There's a lot of different things that are happening at the same time. But investors are buying your stock in the expectation that you are going to go out there and be able to raise more money and be able to keep investors interested in the story. That maintains a stable share price. So I think the main source of information for a stock has to be from the CEO. Yes, there will be others who end up covering the story. People like me, other newsletter writers, there will be others who end up covering the story. I don't like to see very much money at all being put to the publications that present as newsletters, but are actually just pumping stocks. So you'll often, when you read a glowing write-up of a stock, the first thing you should do is look at the disclaimer. And if the disclaimer says that the company paid $20,000, $50,000, $100,000 for this write-up, then ask yourself what the value of that write-up is to you. It's probably not that much, because why would they care what they say? They care about getting $50,000 in their bank account. So I don't like seeing paid promotion. Will promotion happen? Absolutely. Because if I buy a stock, I will write about it in my newsletter, because that's the business that I run. I try and tell my subscribers what I like and what I don't like and why I like it. And if I really like a stock, that's what I'm going to write about. So I don't like a lot of paid promotion, but marketing is very important. So I don't know if I was clear on that, but it is a really key for the CEO to spend a huge portion of his or her time networking, spreading the story, and trying to cultivate sticky shareholders.
That definitely makes sense to me, because that's sort of what I'm trying to build here when I interview CEOs. I call the CEO Barbecue my show, because it's meant to grill the CEO.
Yeah.
And I want them to come on, or the team to come on. And I have gotten answers where I'd reach out to a company and they'd be like, our CEO is not able to come on, but you tell us your pricing and we'll pay for you to do an overview. And I'm like, I don't charge for interviews. I want to talk to your CEO. I don't want to do an overview. But I definitely know what you mean. And that's a whole conversation on its own. You are mentioning the CEO, so that's obviously something that I would look into. That would be yet another one of the P's. That would be the third one, and that'd be the people. I look in the background, the experience, and the past successes and failures. But I don't yet feel experienced enough where I could just look at the name of a person and be like, okay, I'm staying away, or like, okay, this is definitely going to be interesting. You probably do know how to do that, though?
Yeah, I wish that I had that answer for every name that I encountered, but there's a lot that, even for a small industry, there's still a lot of people. So there's certainly people who I really have a lot of respect for. There's people who I will avoid for sure. And there's a bunch of people where I'm like, okay, I know that she did this, or I know that he did that. And, this thing was good. And there was that other thing. So for people, I rely a lot on talking to my network. If there's people involved in a story and I don't know the people, one of the first moves that I make as part of my due diligence is to ask a bunch of my network, do you know Joe Blow? Like, do you like him? Does he have a good backstory? And you can't read the CEO's bio on the website, because of course they're only going to say good things on their bio. So you've really got to, and that's a really hard thing for the retail investor who's not in the industry. Like, I have that advantage. I know a huge number of geologists and executives in the mining space, so I can sort of reach around and touch people who I know were connected to a story that the CEO mentions, and I can get a sense from them of whether this is a good or bad person. And just like you in your barbecue, I want to talk to that person too. Ideally face to face. I want to sit down and understand whether I feel comfortable with the way that this person presents the story, with the answers that they give, right? With the language that they use, with with their ability to assess my questions and level of expertise and respond appropriately. Like, these things are all indicators of whether this person has what it takes in terms of integrity, in terms of intelligence, in terms of multitasking, to do the very difficult task of managing a junior mining company. So I want to talk to the person, and I want to talk to a bunch of people who I think might know the person to get a sense of the backstory, for sure.
That's
It's a
that's
tough one.
difficult for retail investors though, because not, most of them, I have my cafe, or and I'm in Belgium, and
Yeah.
most of the times on the other side of the world. I don't really have access to do that. For example, one new tool that I found though is I found it on Twitter by I guess it's a new company. It's called rockload.com. And they have this mining announcement search engine, and so what you can go ahead and do is just type in the name of a person.
Yeah.
I'm doing it right now, and then it's going to show you, if you do it in parentheses, or like in
Yeah.
quotes,
Yeah.
it's going to show you all the filings that are involved with this person. And so one
Yeah.
thing, because I used to do that on SEC full text, I would look into past filings, and I would figure out what companies the person was involved with
Right. Yeah.
before,
Yeah.
even the ones that are not touted on their website as their biggest successes, but the ones that maybe
Exactly.
didn't do all too well. And I would look up historical charts and see, like, okay, here's a news release from 2006, and the person joined the company in 2006. How did the stock do in the following months or years? And if they were involved in like 5 companies, and all these companies went to zero or had a 90% drop, then you might want to stay away. But if their name pops up on 3 successful mergers or acquisitions, then it might be interesting. Does that sound reasonable, or is that not
Absolutely,
necessary?
for sure. And I mean, it's a very good process for sure to try and to do that. That makes tons of sense. I think one thing that you've touched upon there, though, is that it is time consuming to
Yeah.
choose junior resource stocks, because we're in the midst of 10 Ps that you want to assess
Yeah.
for every company.
Mm.
And, a lot of retail investors, that's an overwhelming task. Like, with work and life, family, whatever's going on. I mean, do you have that capacity in your life to assess that? Especially given that to be blunt, a fair number of the companies that you start assessing are going to end up as, nope, not going to do that. So that's time wasted. At least it's not time spent finding a valuable or exciting new entry in your portfolio. So anyways, it's difficult. And I think that's one. I'm not trying to pump newsletter writers, but if you can, what I do advise or counsel people to do is to try not to do this alone. So try to find people that you can share the load with when you're trying to when you're trying to build a good junior resource portfolio. So maybe there's a newsletter writer in that mix. Maybe you have a broker. Maybe it's a particular online community where you have found that there's, good, honest people who approach things in a similar manner to you. Whatever it is, try and find people to share the load, because otherwise it becomes overwhelming, and that's tough, right? So it's a big task. So try and find people on your side.
That definitely makes sense. I think that's one of the things that has prohibited me from using this as much as I would want to, which is very hypocritical since I came up with it. So, you would expect me to use it all the time. That's not true. Not all the stocks that I have in my portfolio have gone through this process, which might be silly, but maybe I got excited from Twitter or an interview or whatever, but that's sort of how they ended up there. I burned my fingers on one of those. I'm down 75% of one of my, like, the worst performing stock. My portfolio is down 75%. I was sold onto it by someone who I trusted, and without running it through the system. But so yeah, it makes sense to optimize the process to find somebody you could trust. I guess that makes sense. The next speed I would look into, though, is that actually that brings me to, like, I do look into them in an order. So primary metrics, then I would look into the people, and so on and so forth. Because if the primary metrics, like most companies, would already be discarded for me on having too much of an overhang, or like the wrong people are involved, and then I would not go through the last of the 10 piece. But if I get as far, I would start looking into the project, and so the geology, and that's the most challenging part for me. So I want to hear from you how you do that.
Yeah, so I'm not a geologist. I have spent almost 15 years learning geology and trying my best to understand it. And I do come from a science background, so that's helped me, get a foothold there. I'd say the geology, I think this applies to across the range of geologic knowledge for investors, what I'm about to say. And it is that whether you are just looking at the corporate presentation, the information on the website, or whether you are talking to somebody from the company, the marketing person, the president, a geologist, whoever it is, can they explain to you in a way that you understand what the thesis is and how they're going about, like what the thesis is for why there's copper there, gold there, on what sort of scale, on what sort of grade, and how they're going about testing that thesis. Okay. At the end of the day, these are I didn't mean publicly, these are companies that are funded from investors, and they need to be able to explain to those shareholders what they're doing and why they're doing it. And anybody who's taught before knows that you can't teach something unless you understand it. And so being able to answer that question with clarity is a very good litmus test of whether they know exactly what they're doing and why they're doing it. And so, and of course, there's, traps here with people who will, spit polish whatever, or who will arm wave beyond what's reasonable. And those are hard because those take experience and knowledge to understand that they're talking too much about this one piece of data without enough sufficient additional information. I get that there's pitfalls here. But at the end of the day, they need to be able to explain to you what they're doing, why they're doing it, what the next test will reveal, and what they are going to do if that test answers this or this, right? And again, this actually brings the capital markets thing right back into it as well, because I need a clear plan for them to do their very best to create new value for the company. And so if it's a science experiment, which is what exploration is, there has to be a very clear hypothesis, and there has to be a very clear metric of testing. And if it fails, then there has to be the next option, whether that's another project or another approach, or I don't know exactly, but there's quite a few things that can be, another target on the nearby. But I need to know what the next step is going to be. And so, yes, the geology absolutely matters, but I wouldn't say that being a beginner geologist has to keep you awake at night. You need to be able to talk to people and understand at a basic level. And one of the very first things I do is just flip through the corporate presentation. Does it tell a clear story? Like, I need it to tell a clear story, because it's investors' money that they're spending. And so I need them to be updating investors appropriately on what they're doing and why they're doing it. I don't care if it's complicated. It's your problem that it's complicated. Explain it to me. That's your job, right? So that's sort of, I got a little aggressive there, but that's my approach to the geology side of things. And yes, I understand it better than most, but I started not understanding it. So I remember all of the different, all of my different levels of knowledge.
Yeah, I understand that. I try to compensate my people knowledge with my lack of knowledge in the geology space, and I would ask them the magic wand question, which is I give them a magic wand and they can change 3 things about their geology, meaning that's their opportunity to tell me 3 things that they're concerned about their geology, or 3 issues. And I ask them, okay, what are you doing to mitigate those risks or solve those issues? And what are you going to do if you feel solving them? Like, is your company worthless if you feel? So that starts an interesting conversation that helps me. It doesn't help me understand the geology, but it helps me figure out if the person who I'm talking to understands the geology properly to manage it properly. So that's
and is also willing to talk about risk, which I think is a great aspect of that question that you just outlined. Like, this is a risky business. So are they willing to acknowledge what might go wrong and how that might go wrong and what they will do if it goes wrong? I think that's a really great angle. Yeah.
Yeah. The next thing that I would check, though, is where that geology is located, meaning the place. That's the next P, the jurisdiction. And I know a lot of people have their preconceived ideas of different jurisdictions around the world. But like I talk to Rick Rowe a lot, and he tells me that he would prefer a very good
Angola
project
over
yeah.
British Columbia.
Yeah, well, he says something along the lines of, I would prefer a very good project in a jurisdiction that is perceived to be very bad, as opposed to a very bad project in a jurisdiction that is perceived to be very good. Meaning, he would like a tier 1 asset in Congo, as opposed to a tier 3 asset in BC. So how do you approach jurisdiction?
So the main thing that I need with jurisdiction is functionality. Like, I need a company to be able to function, right? It's sort of like going back to why I sold some of those stocks before, because companies didn't have access to capital, so they weren't doing exploration, so the whole thing lost momentum, so the share price just nah. I need a company to be able to function. I need them to be able to get onto their property, get permits in a reasonable time frame with a reasonable process, not be subjected to, all kinds of bribery pressures or things like that, not have security concerns that impede their ability to work significantly, right? So as long as those basic requirements are met, then it's a matter, then I'm happy for them. If they think that they have the sort of connections, knowledge, and whatnot to work in the place, and they can do it in a reasonable way, and there isn't any kind of clear risk that the government is going to, take the project back or something dramatic like that. I mean, those are baseline requirements. As long as those are met, I'm open to almost any jurisdiction. That said, I always remain aware that the market will not give the same premium or valuation if there's two seemingly similar projects, similar potential or similar endowment or whatever it might be, and one of them is in what investors perceive as a safe, good jurisdiction, and one is in a not as safe or not as good jurisdiction. The market won't give this one as much value. So you just have to keep that in mind as you frame your expectations for what the stock is going to do. If the project turns out a dramatic discovery, it will do very well, almost regardless of location, but not irregardless of location, right? Great Bear became as incredibly valuable as it did because it's a phenomenal discovery that was well managed and well told, for sure, with sound science, but also because it was in Red Lake, Ontario, right? Like, it's sort of like a gimme jurisdiction. And if that discovery had happened in Angola, it would not have been bought out before a resource for 1.8 billion or whatever it was, right? So you just have to keep it in mind. You can absolutely do well on stocks when the project is in less desirable or less familiar jurisdictions, as long as the jurisdiction is functional. But you have to keep your expectation of what the valuation is going to do in line with how the market feels about that. And how the market feels about it is a reflection to some extent of how mining companies feel about it. Because at the end of the day, we all want stocks to get bought out. And so it needs to be a place where mining companies are going to be interested in at least thinking about buying the project.
But you don't look at something like the Fraser Institute of Mining survey or something along those lines where they give grades to countries, or?
Not really. I mean, I guess if it's a country that I have no familiarity with, then I mean, no, I have never looked up the Fraser ranking. That's the easy answer is that
Okay.
I certainly see it mentioned on corporate presentations all the time, so I'm aware of its existence. But if it's a jurisdiction that I am unfamiliar with, then I will spend a bunch of time asking management to explain to me how they ended up there, how this works, how that works, processes, timelines, security, and then asking anybody else who I know has some familiarity with that part of the world to give their assessment of functionality and security and whatnot. I'd prefer people who have actually been there and tried to do resource projects, and I like to talk to them about their experiences. Maybe I should pay some attention to the Fraser, but I don't.
Yeah, that's also a tough one for me, because I see companies mentioning it, which is already a yellow flag, because a company is never going to put something on their presentation that might potentially hurt them in any way.
Sure. Yeah.
And also it sounds in theory it should be a very great resource, but it
Mhm.
sounds kind of vanilla once you start going through it. I've went through a couple of those. So
Yeah.
I substitute that by asking management um why, or trying to figure out through their website, if they explain that, to explain to me why they are the chosen ones. I mean, we've been on this planet for, what have been humans on this planet for 2.5 million years or something along those lines. How come after all that time you're the chosen one to have this great piece of land in this great jurisdiction? Why hasn't nobody else picked it up before you? And if that's explained somewhere among the lines of, okay, this is, family heritage or whatever, if it's
Yeah.
explained properly, then I'm like, okay. And then otherwise, if it's a very challenged jurisdiction, then I might start asking more questions. But so that's sort of how I
Absolutely.
substitute that. So
For sure. I always ask, what's the story? How did you end up here? Like how did you end up with this project in this place? And often there is some sort of interesting backstory, a
mm,
family connection, a previous company, a geologist that he met when he was on
mm,
doing this, that, or the other, that he's then cultivated a relationship with for 15 years and they've been putting together this land package. Like there's often a really useful story. So I always like, tell me the backstory. I want to know how you
mm.
got here. And that can answer this question to a large extent as well.
True, true. And that actually brings me to yet another one of those pieces, is the problems, the risks. I feel like we've been talking about them throughout this whole way, but I'm trying to figure out what can go wrong, and what does the company have in place as sort of a fail switch. So um do you have a list though of like issues or something along those lines that you need to sort of check out on before you move on, or like a risk of a list of potential risks?
I mean, really, the list that we're going through right now, if any of them raise red flags, then I will be very upfront in asking about those red flags, and it certainly becomes a big consideration because if they can't get a permit to drill, then the whole stock goes out the window. If they can't, right? If the geologic theory fails, so the hole comes back empty or returns the wrong rock type or whatever, then the whole thing goes out the window. So each one of these has the potential to be its own problem. And again, this is partly about just having conversations with management and about their openness in acknowledging the potential for problems and whatever mitigating efforts they're putting in place for those. I think that's important too. I mean, I think a good management team is aware that a discovery is rare and that therefore, if this target doesn't work, we will pivot to another thing. I want to have that comprehensive plan, and no plan is comprehensive without incorporating risk. And
Mhm.
so I really need management to be upfront about problems. And so yes, that's a big part of the conversation.
Feel like you already answered the next P, because that's the plans for the
Mhm.
future. How are they
Yeah.
going to resolve those issues? That's one of the things. But also, what is sort of, I asked them, what, we're on the phone or on through Zoom. I'm like, okay, if you hang up the phone, what are the next three things that you're going to do within this company? Again, I want to
Mm-hmm.
see that they're communicating it very clearly. I want to know that they know. I want to see that they know what they're doing and stuff like that. But what are you looking for? Are you looking specifically for drilling or analyzing of results, or is there something specific that you're looking for?
I like that question. Like, what are you doing next? And partly I like it because, like, what are the next three things that you, as the president of the company, are going to do, like this week, or what are you doing right
Yeah.
now? And I like it partly because, as we mentioned before, it's tough. Running a junior company is tough. There's a lot of balls that you are juggling with a junior mining company, and so you have to be dedicated. And so I have certainly sold companies before because I sat down with the president or whoever and got a good sense of the thought that I got a good sense of the story. And then over the next while, realized that they weren't working that hard. And you have to work so hard. I just like it's again, I have never run a junior mining company and I never will. It is a very, very hard job between communicating with shareholders, communicating with your board, seeking out technical expertise, outside advisors, things like that, managing your drill contracts, managing your employees, your HR, your social license, There's often multiple projects in play. Understanding the geology, looking at the data, communicating it, having a marketing plan, attending conferences, doing Zoom calls every day with shareholders. There is a huge amount to do. So if they don't have like a answer to what are the next 3 things that you're doing, that in itself would be a big red flag, because there is always a laundry list of tasks ahead of the president of a junior mining company. So I think that that's, again, we've been talking about lots of different ways of getting windows into how robust the company is, like how many ways they have tried to support it, and how much support it's getting from the efforts of the team and the technical inputs and all of that. These are sort of all the questions that you've asked are all different windows on assessing the robustness of the company. And that would be another angle on it for sure. And yeah, you plan. Almost my capture of all of your P's is plan as a first question, which is, what is your plan to create shareholder value? Mm-hmm. And that's maybe how I start the same conversation. You're just approaching it from the same conversation from a slightly different angle, but absolutely plan is essential.
After I've done all of that, and this comes from Rick Rule as well. He told me that this used to be the 7 P's. I turned them into the 10 P's eventually, because Rick Rule told me that I need to be patient, and I need to exercise prudence, basically. And I thought about how do I bring this into a more spreadsheety vibe type of P. And prudence was a difficult one, but it eventually what I came up with is to ask myself if I have enough information to be prudent. Like if I went onto the website and presentation, I spoke to the CEO, did they give me enough information? Did I find what I was looking for? Is there enough information on the company's website? Did the CEO give me enough information? Just, am I able to be prudent enough to take the decision? Does that make any sense, or is this vanilla? Because it sounds vanilla, but then also makes a little bit of sense. I don't know. What do you think?
No, I mean, I think what you're getting at is really important, which is a lot of companies of the perhaps less quality companies will be selective in their presentation of information. And so, yes, you can go through their corporate presentation and their website, and it can be pretty thin. And what you can see might look quite nice, and this is, again, one of these things that's so tough for non-expert investors in the space, is to be like, is it thin? Like, is it actually just a simple, good story? Or are there layers of information here that are not being presented? And quite often there are layers of information that are not being presented. And the prudence is, as much as anything, an awareness that that's a reality, that there may well be layers of information that are not being presented. And so, again, that's part of having a team around you, right, that you work with. So being like, okay, so then you reach out to your team and be like, okay, so I was assessing this company, and like, it seems like this is the story. Is there anything else? Like, are there other things that I should be asking, missing, looking at, and see if anybody else has uncovered it? Because selective dissemination of information is a problem in our industry for sure.
That's true. When it comes down to the patience, I'm sort of asking myself, does this fit my strategy in terms of a holding period? Do you have that for yourself? Like, do you have a predetermined holding period that you want this investment to pay out in?
I wish it were so simple. I feel like in more liquid stocks, more liquid like sectors, and maybe sectors where there's fewer constraints on how quickly things can happen, like in junior mining, like permitting timelines, or like, the weather, like there's lots of reasons why things can take a long time, and those reasons differ significantly from one stock to the next stock, so it is impossible, I think, especially on a pre-discovery story, to have a timeline. Of course, you're going to enter on a thesis that they're about to do this test, drill program, whatever it might be, and that will work. but discoveries often don't happen on the first test, right? And so then if that first test, call it fails or doesn't succeed dramatically, then you have to reassess your investment thesis and decide whether the new information supports the thesis and supports you then having the patience until it's time for the next test or not. So you constantly have to revisit the reason that you own the stock. Why do they think they're going to make this discovery? Did the last round of data support that thinking? If so, maybe it, and do they continue to have the capital markets access and plan to get to the next test? And if those are yeses, then holding might make great sense. If one of them is a no, then it might be time to, accept your losses and move on. So patients can have no defined timelines here. It's very much a stock to stock story.
When would you lose your patience, though, if you have a management team that's promising, a 50 million ounce gold deposit, but they haven't found it in like 15 years? Aren't you going to lose your patience?
Oh, definitely. I would lose my patience far before that. I mean, anybody who's arm waving about a 50 million ounce deposit and doesn't have one would not really get my time of day. But again, it just comes back to whether they're communicating effectively, appropriately, maybe is the right word. Like if they, they should know that I own the stock based on a particular thesis, and with an expectation from them that thesis would get tested in this way and in this way and in this way over a likely time frame, because that is what having a plan is, and the plan came from them. And if that plan doesn't happen, then they better have a reason why not. They better have a new plan to present. That new plan has to make sense, right? And I totally get that things can trip up, that sometimes a drill program just doesn't work because the rock wasn't as competent as you thought, or you had really bad drillers, or you couldn't get a driller there, or I don't know, there was a grizzly bear that decided to camp out on your drill target for the summer, right? There's reasons. I get it. I'm not a drill sergeant, but you got to tell me what's going on. And I don't mean me. You don't have to pick up the phone and call me, but you have to communicate appropriately with the people who gave you the money to go and do the test about what's going on with the test and the money. So those are the questions that impact my patients. Right.
When I'm done with all these, I would look into the price versus the value of the company. The obvious sort of thing. Do I want to buy now? Do I want to wait? And that's a tough one, right? But especially when it's an exploration story. How do you value that? That's where I'm really stuck. I have no idea. So what can they tell me there?
That is a hugely tough one, because at different moments in time, the same story can be considered to be worth significant, like dramatically different amounts. And so I think how do you want it to be reasonably in line with peers. If it's a pre-discovery story with a project in Peru, or a silver target in Mexico or something, you want it to be reasonably in line, like within sort of a 50% range of similar peers and again, what makes a similar peer? Does it have to have sort of similar management success stories? Does it have to have a similar share structure? Right? There's a lot of factors that go into determining whether something is a peer, but you want it to be vaguely in line. From there, it's about, how soon something might happen and what value might be created if that thing turns out well, right? So it's kind of like trying to time the bottom of a bear market. You can't. Don't try, you'll fail. But you want to enter somewhere in the trough, right? You want to enter in the time range that when people look back historically, they'll be like, oh, if you bought in this time frame, then, that was a good entry point. And maybe that's like a 3 or 6 month window, whatever. Similarly with a junior, you want to get in at a time when you think the potential increase in value on success of the test is what you're looking for, right? So there's good upside from here if it works. That's a simpler way of saying it. I was making it too complicated. And the higher the valuation, especially if it's pre-discovery, so the more hype speculation that's already built into the stock, the less the potential upside is from where you stand now. And I mean, that's obviously trying to simplify a complicated question. I mean, we can go back to Snowline Gold. I mean, I bought Snowline Gold at, I think, 240, and then it jumped to 380. Was 240 an expensive price? Well, I certainly thought it was pretty expensive. I can't remember what the market cap was, but like that was a $300 million market cap, I think, for not a pre-discovery story, but a very early unknown scale, scope, grade discovery story. But, you know, I looked at the volume of rock and the vein density and and I was like, okay, this thing could go to much higher. And so I thought the upside from there was worth it. I would rarely buy a pre-discovery story with a market cap of $300 million, but I did that time. So it's really about, where do I think this thing could go from here if the test is successful, and how many potential or opportunities are there for them to trip along the way? Like with Snowline, I knew the results were in the next few weeks. So there wasn't a lot of opportunity for some black swan to interfere in a few weeks. I was like, either these are going to hit and it's going to work, or not. And that's the bet that I took. So it's really about, what's the potential for upside from where you are. It's hard to know whether the value is right, because it's right is a very difficult thing to pin down.
What about after they find something? I don't know how many of those stocks you pick up or you don't, but one ratio that I see broadly being used is the enterprise value to pounds in the ground. So how much are you paying per pound in the ground? And I've come to really hate that metric, but I still see it being used. And I hate it because geologists tell me to hate it. Geologists tell me, like, you got to think about metallurgy. Like, if they have something in the ground, what value does that have if it's never leaving the ground? If the metallurgy is too challenged, if the permits are not coming and stuff like that. So what do you think about that type of ratios?
Yeah, I don't like, for sure. I mean, I think there's a lot of numbers around mining projects, obviously, because there's grade and there's scale and there's tons or pounds or ounces or, you know, throughput or whatever. There's a lot of numbers. So you can create a lot of metrics, and a lot of them are not particularly meaningful. I would say that there are certain points when metrics can become useful. So I would say when a company has started building a mine, and you're interested in what the potential re-rate from developer to producer might look like, then you can start to do some real peer comparisons, because at that point, the peers are easier to define, right? You can find projects with similar, in a ballpark, geology, processing approach, scale, similar jurisdiction, or at least in terms of perceived good, bad jurisdiction. And then you can look at, you know, then you can look at metrics and compare how this developer might be re-rated, how their value might increase if they do become a successful producer. So I think there is a time frame there when those metrics can be useful. I think if you're comparing producers as well, then some of those metrics can be useful. They're not plated in gold, but they can be useful. But on the exploration side, you're right. It's just not. There are too many things that push explorer share prices around, from financing needs to free trade dates to, you know, exploration timelines to drill results coming out to marketing campaigns to metallurgy knowledge or lack thereof. There's too many things that push a junior company's share price around for basic metrics to matter much.
Maybe I should change my last P from price to potential, because you've got cheap, but then you also have potential to go up with juniors, especially with like if they have a PEA, like you could check a lot of things, I guess, but if they're much earlier than that, maybe potential is more important than price. What else do you think I'm missing in the 10 piece?
I think you've covered I think, I mean, 10, that covers a lot of ground for sure. Nothing jumps out at me that you've missed. I think you've touched all the bases. I do, yeah.
Okay.
I think you've done a good job.
Thank you. Thank you for that. Well, we've been at it for a while, so I feel like I'm wearing you down a little bit. Is there something that you came hoping to talk about, but I failed to bring up?
No, I don't think so. I mean, this is what I do all day, every day, so I can always talk, but no, there's a lot of potential in this market. I think it's a choppy moment. There's been a lack of investor interest. But I think that there's some really great opportunity in the mining markets over the next few years for those who can find just enough time and enough people on their side to dig their heels in and find some arenas. So like a commodity that you particularly believe in, or a project that you particularly believe in. If you can find some of those, then I think there's some really great opportunity out there.
Gwen, I really appreciate your time. Thank you for sitting down with me.
You're welcome.